Well, it looks like Tesla's stock went absolutely crazy on Friday. This comes after a new partnership between Tesla and Ford. And I think this was positive for both companies, being that Ford is going to have access to about 50% of Tesla superchargers. But don't be confused. This is not like Tesla is going to give Ford access to the busiest superchargers. You're not going to, generally speaking, be waiting behind, some Ford electric vehicle as a Tesla owner. That's unrealistic. That's not going to be the case here. But it does help solidify Tesla as the leader in the charging network, and that potentially Ford and GM, they're not even going to try to compete on the same scale as Tesla. And this is ultimately the biggest factor to buying an electric vehicle is how are you going to charge it? People are afraid of being stranded on the side of the road. That's also because people have a lack of education on Tesla vehicles due to the lack of advertising. And I think advertising over the next couple of months here, whenever Tesla decides to do it, is really going to be a game changer for Tesla's stock and Tesla's demand. A lot of people think Tesla has a demand problem. Well, maybe even if that is the case, maybe it's because they're not advertising. The general population has range anxiety. They don't understand what an electric vehicle does. Even when I tell people about, a Tesla, they're like, aren't you just going to get stranded on the side of the road? When that's not reality, okay? How many Teslas have you seen stranded on the side of the road because they ran out of battery life? I've never personally seen it. Maybe you guys have, but again, I don't see a lot of Teslas where I live because not a lot of people know about them. Not a lot of people understand the technology. Long story short, Tesla stock is going crazy based off of this news, as well as other positives that are playing a role for Tesla stock. So we're going to get into the latest data and information you need to know as Tesla investors around, obviously, Tesla. We're going to talk about what happened on Friday as well, give you guys the latest on the debt ceiling crisis. So let's get into it. Tesla stock rallied over 5% on Friday, rallying about 5.2%, including the move in after hours up to $194 per share. You broke out above this key technical downtrending trend line that I have had drawn up ever since Tesla hit $217.66 per share after their last earnings, or 2 earnings ago. You have seen the stock kind of downtrend. Well, now it's on an up and up basis. You're gonna have to retest that 200-day moving average at $200.22 per share. But at the same time, there's pretty negative things happening in the markets. And I think this is no surprise to anyone. Fitch threatened to downgrade America's credit rating on March 6th of 2023. They said even if a default is avoided, that we could still get downgraded. And basically they cite like, hey, is America really a risk-free asset if every couple of years you're faced with a possible default? Probably not. Even though we've never defaulted, that doesn't sound like a risk-free asset. And that makes a lot of sense to me. That's why I think personally at some point they will likely downgrade America. Does it happen this weekend? Does it happen Monday? Does it happen next week or the week after that? I don't know. But as of right now, there's a 50-50 chance, as of their negative watch that they put on America, that a default or a downgrade will be coming at some point in the near term future. Now, at the same time as this, the TGA, the Treasury General Account, is hitting the lowest levels that you have seen since 2018, down to $49 billion. And the government says the new X date is June 5th. And that sounds a little bit more realistic on when a default might actually happen. And then on the other hand, what you're seeing from the debt ceiling negotiations is, quote, Biden says he's very optimistic about a debt ceiling deal. And he says, quote, I hope we'll have some clear evidence tonight before the clock strikes 12 that we have a deal, Biden told reporters on the South Lawn of the White House shortly after 6 p.m. Eastern Time. Quote, "It's very close and I'm optimistic," he added. "I'm hopeful we'll know by tonight whether we are going to be able to have a deal," Biden said. Negotiators still hadn't reached a deal by the end of the day Friday. And then it says down here, quote, "We continue to have major issues that we have not bridged the gap on." Republican negotiator Garrett Graves of Louisiana told reporters Friday afternoon in the Capitol. So it really doesn't look like they're close to a deal. I don't know what Biden is saying, or it's very weird. On one hand, they say we're close to a deal. We might have one by midnight. On the other hand, some Republicans are saying, yeah, we're not even close to a deal. Like there's big problems here. It says, in a sign of how contentious the issue had become Friday, Graves gave a curt response when a reporter asked him if the GOP would be willing to drop the work requirements in order to close a final deal. He said, "Hell no, not a chance." Biden struck a similarly defiant tone when a reporter asked the president what he would say to, quote, "Democrats that don't want you to bow on work requirements." "I don't bow to anybody," Biden shot back. Like, it doesn't sound like they're very close to a deal. But hey, who knows? Maybe one side will cave in. If you look at Kevin McCarthy's Twitter page, which is probably going to be where you'll get the first announcement of a deal, still the same verbiage of this would be a Biden default. This is a Biden problem. And that obviously taxation is not the problem because we're at the highest taxation rates that we have really ever been at in history. So, not looking very optimistic on the debt ceiling. We'll see what happens. There's some time over this weekend. Maybe something does ultimately get done, but it doesn't look as likely. Now, a default isn't really on the table as well. Don't be confused here. We're not going to default. If we default, you don't want that. Nobody wants that. That would be a hard recession. That would be millions of people losing their jobs. That's simply put not going to happen. If it did happen, stocks are going to fall 40 to 50%. Tesla is going to crash. Nvidia is going to crash. Everything that has done well is going to crash in the markets. Now, even a downgrade will have a very negative impact on our markets. In 2011, that's the only time we ever seen a default or a downgrade. And we did not even default. But that did happen on August 5th on a Friday. You opened on trading August 8th, and the S&P was down 6.5%. This was already kind of happening at the same time the markets were falling. So keep that in mind. It was a very volatile moment in time for the markets, and then obviously the downgrade was just the last straw. And then good news is you ultimately did bounce back from there. And by January of 2012, you were hitting a new high in the market. So it's not a huge long-term bearish catalyst, but short-term, you could get a pretty big downside reaction to any news of a credit downgrade. It would kind of be like if you got pre-approved for a house, for a mortgage, a 740 credit score, 740, 760, and you get the best interest rate possible. And then when you go to close on the deal, they run your credit again, and it's at a 700. Your interest rate's going to fluctuate. You're not going to get as good of an interest rate as you did with that 740 or 760. Kind of the same way you could look at a credit downgrade. It's basically lowering the credit score of America. Now, that's all I have for you guys on that note. If we look at what happened on Friday, it was very, very negative. You've seen bad inflationary data. Durable goods orders month over month. You were expecting that to come in at negative 1.1%, showing the economy slowing down. Maybe inflation, kind of starting to go down as well. Durable goods orders came in at positive 1.1%. Core PCE index month over month came in at 0.4%. The estimate was 0.3%, much hotter than expectations. Not good for inflation. Personal spending also came in way hotter than expectations. You were expecting 0.3%. It came in at 0.8%. Personal income month over month came in at 0.4%. You were expecting 0.3%. So again, super hot in that regard as well. And what this has done is caused the Fed futures to price in a rate hike in June. You're expecting a rate hike with a 64.2% probability. This rate hike probability was 1%, 2% at one point. So you've seen that totally flip-flop, and markets were almost certainly a couple weeks ago pricing in the Fed to pause in June, and that looks very unlikely at this point in time. Markets have just continued to go higher though, with basically no regard for this. So we'll see if this catches up, if the markets do start to pay attention to this. I think ultimately they will. Now, something else I find pretty interesting that I don't think a lot of people are talking about is actually the Chinese Yuan. And what's going on with this is every time it gets above 7, the markets have been in a crisis, have done very bad. And if we look at this on a 25-year basis, every time you're getting above 7, you've had a problem, right? If you look at back here in 2007, right? It was falling this whole time. You were above 7 and you had a crisis. Back here in 2016, you rose to almost 7, had a crisis. Back here 2019 and 2020, you broke above 7, you had a crisis. Back here at the end of 2022, when the markets were really starting to fall and starting to fall in August of 2022, the Yuan just started shooting up. You got to 7.23 and markets were crashing. Now you're back above 7 again. So some people are pointing to this like, hey, maybe this, is an indicator of some trouble or some pain to come. Who knows? We'll see. It's interesting. Now, if we take a look at the option activity for Tesla, on Friday, you've seen 572 orders totaling $1.13 billion with a positive order value of 58%. Over the past week, you have seen 2,300 orders totaling almost $13 billion, positive order value of 55%. And if we look at the option activity for Friday's expiration, 65% of the volume was calls, 35% was puts. If we look at next week, you got the open interest, 57.28% calls, puts 42.72%. For June 9th. That's looking very bullish as well. June 16th is looking even more bullish. The volume, about 80% calls and 20% puts that we've seen on Friday. So people are looking pretty bullish on Tesla here. But I think really if and as long as you don't have a problem with a default or a downgrade, then I think Tesla could continue for a while here. Especially what makes me very bullish is the advertising. Tesla is never advertised. I think that's going to really create a lot of demand for Teslas once people start to get word and realize some of the problems or issues they fear with Teslas are really not accurate. I think people are going to get very excited on this name, and I think the stock could easily rally to $200 per share or $300 per share in a relatively short amount of time. I mean, after all, a Facebook or a Nvidia, look at them. They're at all-time highs, or close to all-time highs, at 52-week highs for most of those stocks. Tesla, not even close to a 52-week high. So I think you got a lot of ground you could catch up on in a very short amount of time if the market conditions continue to warrant a rally in the market. So that is going to do it here in this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. You guys have a great weekend, and I will see you in the next one.